Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the euro currency. And based on the recent performance, it seems that half of the percent shift was not quite unexpected. So because reaction was really mild and it was minor jump first and it was reversed fast to the downside. The comments actually that have followed from after the meeting also was really kind of dynamic. It's just because, well, actually we talked about this in the weekly reports that even a month ago central banks already switched the back pedal, and now it confirms the same. So they said that if they will see some disproportions on the bond market among the highly indebted yields and for instance Germany bonds yields, they will apply the new program that, well, actually no limits have been provided, so it's supposedly it might be unlimited program. We will talk about this in the weekly report with the more precision, more details, but in general it suggests that European Central Bank intend to buy bonds of the highly indebted countries such as Spain, Italy, Greece, Portugal, to decrease the yield, and simultaneously they will sell the bonds of the developed markets with a good fundamentals such as Germany, for example. So in two words speaking, European Central Bank intends to fight inflation with the printing more money. So as you understand, in the current circumstances, we should not expect decreasing of the inflation in the European Union anytime soon. The rising yield to the 0.5%, this is, guys, like, well, it's like the pie to the elephant. So it's nothing. So with inflation of the 10%, moving yield to the 0.5%, well, it's nothing. It makes no impact actually on performance of the economy, on inflation as well. Fed stands a lot of steps ahead, few steps ahead, and they can't control the inflation. So what we could speak about the European Central Bank. So this explains why reaction stands, well, very shallow. Practically, it means that supposedly right in this area, the pullback here could theoretically start. So the bread and butter trade has chances to start right around this area. The only tricky moment that, well, I'm a bit concerned about, I will show you a bit later, but in general, well, this is an area that really could trigger the downward action. So actually you could see the previous pullbacks that have followed after the touching of the weekly lever sold. It has happened previously. It's very harmonic. So you can see they stand approximately with the same distance. Here is the half of this, and here is also, well, maybe slightly smaller, just few pips. In general, we could say it's all very similar to this one. So from that standpoint, it also suggests that probably here we could get the starting of the downward action. On the 4-hour time frame chart, market is calling around the confluence. We've got nicely looking bearish engulfing pattern right there, so also could be used for possible position taking, and that might be the background for starting bread and butter trade and a 618 pullback to the downside. With this recent performance, what you could see is wash and rinse right on the top, and here is the only thing that you could consider if you intend to take a position based on this setup and right at these levels. So maybe market could try to complete a kind of the ABCD pattern, but this is for just perfectionists. So if you would like to try to catch the just perfect entry opportunity and minimize the potential risk, the placing stop just above the wash and rinse, well, theoretically you could consider this ABCD pattern. So divergence here has been completed. It's just because market barely has washed out the previous lows, so the target of the divergence has been done. Invalidation point stands right there. So if market will erase this engulfing and keep going higher, it means that we're turning our attention to next resistance around 103.60, as we said, and then we'll see what will happen around this level. Because overall, fundamentally, the step that the European Central Bank has made is absolutely doesn't change the balance of the transatlantic monetary policy between the Fed and Europe, which hardly could make the euro more attractive compared to dollar in the current situation. That's why this performance is definitely short-lived, and we should be prepared for reversal if it will happen. If it will not happen here, so maybe with some upper continuation, we start to watching for this level. Target, if downside action stands a minimum target, so it might be just direct continuation, but bread body trade is 176, so right there at 618 support and the whole upward action. This is minimum target of the butterfly. The only tricky moment here exists, that market stands flat. So on the 4-time frame chart, you could see that trend turns bearish, but price action hasn't started downward action very soon, so fast, right after the this wash and rinse appearing of the engulfing. Well, currently it's a bit, well, not as big problem as it might be. It's just because it might be just because of the short time that has been passed since the European Central Bank meeting. So market shows the reaction, then turns some sideways action, thinking and trying to make the conclusions on this event, what to expect next. But in general, if market will stand there for a longer time, for today's session, for instance, well, in this case, it will be more risky to take the position there. Is just because too long flat standing around the confluence without starting the downward action when you have a clear bearish pattern in place. This is more the signs in favor of the bulls, that market just stands with the consolidation suggesting possible upward continuation. But as I said, pattern just has been formed. Let's see what will happen, especially on the hourly chart today, whether the market will start downward action or not. So that's the thing that you need to think about, whether you would like to take part right there with the position taken, or you may prefer to wait and see what will happen next, maybe wait for a higher standing level. So those of you who has some difficulties with decision making but intends to take the short position, well, as I said previously, sometimes the splitting of the position is not a bad idea. So as I said yesterday, you could trying to take the position here with some minor size and then add more if market will keep going higher. So that's our current view on euro currency.